Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I am your host, Whitney Sewell. Today, our guest is Denise Piazza. She is a founding partner of Mainline Capital Advisors. She's been investing in real estate for close to 10 years in a variety of real estate asset classes as both active and passive investing. So her experience with multiple asset classes led to her passion for investing in multifamily and educating professionals on the benefits of diversifying their portfolio with assets that provide strong, predictable returns. Denise and her partner also run a monthly real estate investing meetup group in Wayne, Pennsylvania. So Denise goes into detail, just going from LP to GP, right? Or passive to active, which is what many folks want to do. She outlines, how she picked a mentor, why that was important to her, and actually a different twist on a mentor than I've heard most people say, which seemed to make a lot of sense. But I encourage you to listen to that, but also just accelerating the path from passive to active and raising capital for her first multifamily deal. Also, how she communicates with investors, some challenges she had from LP to GP, and she just provided a ton of value in getting that first deal done and raising money and working with investors. Hope you enjoy the show. Denise, welcome to the show. I'm excited about this conversation. You've already shared you're a big listener, and I'm grateful. But I want to jump in and say, you've had some success, or lots of success in raising capital and those relationships with investors that I know many of the listeners are going to take a ton of value from this interview today, and just from learning from how you've been successful at that. But give us a little of your background before we jump into that, and maybe a few things that were helpful in being successful very quickly in this business.
Sure. Thank you so much for having me, Whitney. I really appreciate it. My background is that I started working with real estate about 20 years ago while I was employed with a CPA firm. I had a lot of exposure to accounting and tax for various real estate businesses and folks who invested in real estate. So got a lot of good exposure from that position. But then after a few years, I went to go work for a few large Fortune 100 companies doing some accounting and finance work in those organizations. And luckily for me, the company that I worked for was growing very quickly. I had to swim in many different lanes in my position and just had the opportunity to work on billions of dollars of acquisitions, capital projects, joint ventures, valuations, other large transactions. And then I'd say about 10 years ago, amidst all that chaos in my career, my husband and I, we started investing in real estate. We've invested both actively and passively across multiple asset classes, single family, commercial retail space, office space, triple net leases, and then ultimately multifamily. And then all of this in addition to our more traditional investments as well. And so through these experiences, I think we really developed our passion for multifamily investing. Being CPAs, we love the tax benefits in comparison to some of the more traditional investments that we had. And then not too long ago, I decided to pursue being more active in the multifamily space, given all of my experience. And how passionate I was about the benefits of folks diversifying, researching different markets and underwriting deals. And happy to report that we're now under contract as a co-GP on a 400-unit property within just a short period of time to deciding to become general partners in addition to being limited partners on our deals.
Awesome. Well, I want to talk a little bit about your path from LP to GP in a moment, but I want to back up some because you've had some early success in just raising money and working with investors. And again, I know that we can all benefit from. Did you have any kind of mentors, anybody that helped you, through that process and learning this business and growing to the point you're at now?
Yes, I would say one of the most important aspects that accelerated my success and me playing a role and as a co-GP is my mentorship. So before I decided to make the transition from passive to active, I actually interviewed 6 different mentorship programs, tried to get to know the folks and then who run the program, and then also tried to find people who were within the program. For me, a lot of folks talk about when you form partnerships in this business and you're working with team members, make sure you find people with complementary skill sets. Well, I would actually take that one step further, Whitney, and I would say make sure that when you're finding the right mentor, when you're entering the space, try to find someone whose greatest strengths are complementary skills to what you have to offer. So where I focus my mentorship program is with individuals whose greatest attributes are in construction and asset management, because given my background, those are just areas that I didn't have as much experience in myself. And so I wanted to make it a point to learn from their experience. So that was my big, I think a very, very big contributor to my success.
Interesting. I don't know that I've heard many people say that. If anyone, like, find your mentor with complementary skill sets. And that's a neat dynamic to think about. Hey, that's where my weaknesses are. Why not find this mentor that's an expert in that part of the business? To help you in that area. And so it's incredible. And you interviewed 6 different mentors, right? Yes. And numerous people in those programs. I think it's great due diligence. I did the same thing many years ago. I've had numerous mentors for different things, right? Mm-hmm. At first it's like, oh, do I really spend this money, on a mentor? Do I really want to do this? And many years ago, it seemed like so much money for my wife and I to contemplate, giving to someone. But man, I couldn't imagine it any other way now. Hey, let's speed this process up and let's get, somebody on our side that's been there and done that. Gives you so much confidence. So no, that is awesome. And what about, let's move into that first deal, or actually let's go back a little bit though, and talk about the path from LP to GP, and then let's go into the first deal. But so why go from investing passively to becoming a part of the general partnership or active side? Why do that?
Well, I think it was through my experience in passively investing that I really, it started with me becoming extremely passionate about the underwriting aspect associated with deals. So with my background being a CPA and my husband being a CPA, and by the way, we do always joke that if anyone has any problems falling asleep at night, they can please feel free to call us and we'll tell you all about our day. So both of us being very financial oriented, that's, just similar to a lot of LPs, they go and they focus, directly on, the returns and the metrics, the projections. And so, I have valuation experience in my background. I have financial models in my background. So I try to do a lot more due diligence when investing with different syndicators. I always, made it a point to not invest with someone until I had the opportunity to review their model and review some of the more key assumptions associated with those deals. And then I just became so passionate about it that I ended up, though I had the background in financial models, there's obviously some more nuances when it comes to multifamily investing that I wanted to understand. So I got really focused. I read several different books about the syndication process, and then about financial models and different assumptions when investing in commercial real estate. And then I even went so far as to find a one-on-one mentor that would walk through underwriting with deals with me, just so that, first of all, that it was someone that I had a lot of in the industry that I had a lot of respect for in working with them. And then also so that when I did eventually make that transition and become a general partner, the most important thing to me is protecting other people's money. And so I think you really have to understand how to underwrite deals. So that whole interest in underwriting and interest in the financial aspect of deals is really what triggered it for me, and thought I want to do this, and I want to do it the right way.
That's incredible. You need the mentor, right? And it's neat though too. Like you and your husband's background as a CPA, man, you all are going to be all in the numbers, right? And you're going to understand that. You're probably going to have more understanding than most just coming into the business, or it's going to become easier maybe because of all the work you already do, and just numbers and financial planning and thinking through strategy and things like that. And so it's a great place in the business for you to shine, right? But already because of your background. And so there's no doubt, why, or just how you can see why you would dive into that section of the business and be passionate about it. Is there any ways that that anything that's helped you accelerate that transition from passive to active, anything that's helped?
Sure. First of all, I'd say just my passive investing experience across multiple different asset classes, and taking the time to develop my passion for multifamily. I now invested in close to 1,200 doors as a limited partner. I used those experience to figure out what I liked and what I didn't like about working with different operators. I also used the experience to learn, best habits in terms of communications with investors, and experience in different markets, and diversifying myself. And as I said, I had that experience with financial models through my corporate roles. But in, understanding the nuances to multifamily assets, I really made that one of my main goals in deciding to make that transition. And I think, that really helped accelerate that transition. Another step that I took, as I mentioned as well, is really finding the right mentor. One that, if at all possible, you can find that has complementary skill sets to yours. And that's their greatest strength and greatest attribute that they can bring to your background. And then I also went with a mentor with not quite as large of a group. So I've been able to make some incredible connections with folks in that team, and try to lead with my value add to wherever they are in their process, and wherever their experience takes them. I know what I can do to help contribute to their success as well. And then, truthfully, one of the main, I would say the main, thing that has contributed to accelerating my role as a co-GP would be my discipline and my sacrifice. So being an active operator for multifamily deals, as you know, is a lot of work. You have to be extremely disciplined in your approach, and effectively using your time. So I like to think this is an area that I excel in, just because of the example that my parents had set for me growing up, and qualities that they instilled in me. And then the fourth piece I would say is really just network. Network until you're so exhausted that you can't network anymore. It's so critical because it opens up so many doors through networking with other individuals. I host a monthly real estate investing meetup. I attend conferences. I'm constantly reaching out to other syndicators. And as you know, there's so many folks in this space that are incredibly generous with wanting to share their experiences. So it really provides a great opportunity for you to learn from other people's experiences.
Those are some great tips, and no doubt about it. And like you just said too, there's so many people in this industry who've been so generous with me as well over many years now, and just shared and mastermind and talk about different things that we've learned. And it's just great. It's a great industry, and you have to put yourself out there, keep networking, right, to meet those people like you're talking about, and can that make those connections so crucial to moving forward and especially accelerating, like you did. So let's talk about that first multifamily deal a little bit and raising capital for that first deal. I mean, oftentimes people are scared to death, right? Of raising money for that first deal, and just how, you have no credibility and nobody knows who you are, all those things. And how did you do that?
Right. Well, I would say personally, I like to think that, especially with the first raise, even though most folks are intimidated, that's the area that I was most excited for, because I feel, I won't invest or I won't be a part of any deal until I feel great about the underwriting, the team, and the market. And so that's where I sort of gear my focus in trying to raise capital. Is I explain to folks my experience in passively investing and the three areas that I would vet prior to investing in a deal, and how important each of those aspects are. So that's allowed me, just having that passive investing experience, it's allowed me to really sharpen those skill sets and to be able to, empathize with folks that, they're in the same, I'm in the same situation. I've been in the same situation several times across several different classes that they're in, and able to walk them through each of those scenarios. And then another aspect that I think allowed me to do so well with this, with the first capital raise that I did, is just the transparency that I have with all of my investors. I talk about, what I've done in the past, where I'd like to go with my role as a GP on the deal. And then also, explain to them, make sure you always explain to folks the risks that you perceive to be associated with the deal, not just why they should invest in it, but also, be very transparent as to any risks that you see and what your team is doing to mitigate those risks. And I think that really goes a long way with people, because, they're already thinking about, 20 different risks, and you might bring up a risk that they hadn't considered. But again, I think it's all about being transparent and, making sure that you can pivot your discussions and your ability to walk them through the deal depending on their level of experience as well. So when it comes to new investors, I like to think initially when I started investing, I didn't have much background or have the time to invest in learning all of the nuances. So I walk them through it. I'm happy to walk them through investor presentations, waterfalls, anything that they might be intimidated to ask questions about in a larger group. And then for the more seasoned investors, I'd like to think that I can anticipate many other questions. And I'm intimately familiar with the underwriting. And I think being intimately familiar with the underwriting, the market, and the team, and feeling good about it, it just comes through when you're talking through your first deal.
Great advice. And I love about just being transparent, right? Be transparent with your investors. It says a lot about yourself. They can sense really if you're almost being very transparent or not. Especially you talk about explain the risks. And I think that's important. But you also said, which is something everybody should be ready to do, but tell them what you're doing to mitigate those risks as well, right? Be prepared. Right. Obviously, if you share risks with them, what do you think they're going to ask, right? Which I would ask as well, right? And so you want to be ready to share with them, these are the risks, but this is why we're still willing to pursue this deal, even though these risks exist. And this is what we're doing to mitigate those risks for sure. And so, how were you? How did you have the confidence to move into that first deal? I know you had a mentor. I'm sure you were educating yourself. Anything else that helped you to move towards that project?
Again, I think that, the years of experience that the other co-GPs have on this deal, the market that we were in, and again, just, leaning on and explaining to folks how, my mentor, prior to my experience in acting as a co-GP, just like many other passive investors, focused on the financial metrics And my mentors have been so incredible in helping me to realize the importance of the team, and just the operations and the post-acquisition process. And I've felt more comfortable than in this deal than in any deal that I've invested in the past because of that team that I get to work with. So I think that really helped build my confidence and know that I was making a good decision, not only for myself, but for my investors. And I want to bring my investors along with me on all of my future deals, obviously. And I would like for them to refer, other investors. So I think, focusing on that excellence in customer service, and then also just, as I said, being extremely confident in the team that you get to work with and their previous success and ability to operate assets complements, as I said, the skills that I already bring to the deal.
What would you say is has been your biggest challenge going from LP to GP?
I would say the two biggest challenge, as you, I'm sure, experienced early on, is the one, just the barriers to entry in this industry. So I think how I've accomplished overcoming that is to finding the right mentor, as I mentioned, one with a strength that complements your skill set. And then the other biggest challenge, I would say, is finding a good deal. So we all know how red hot this market has been, but I will not invest with someone who does a deal just to do a deal. It's okay not to grow as quickly, because when it comes down to it, this business and this industry is all about reputation. So protecting your reputation is the most important aspect to this business, and makes it even more important not to do a deal just to do a deal, and make sure that you're diligent in finding good deals and the right deal.
For sure. Patience is key. That's no doubt about it. Is there anything you would have done differently, just knowing what you know now?
I would say that I would start networking with brokers right away. And then because it takes a lot of time to build up those relationships, and get extremely creative in how you network with brokers, how you communicate with them. Don't be afraid to stand out and make yourself memorable, and do what it takes to do so. And then the other piece I would say is, do not wait for the right deal to start capital raising. Start talking to folks. As I said, I was investing passively. Throughout the whole time that I invested passively, even before I made the decision to become active, I talked to everyone in my network about, my experiences in investing passively. So they knew what I was doing. They knew that I was excited about the process and the returns that I saw. So I would say, make sure you're talking to folks about what you're doing, get the word out, and do not wait until you get the perfect deal to start capital raising.
Since you are into underwriting as well and passionate about that, how do you prepare for a potential downturn?
I would say, everyone in this industry talks a lot about conservative underwriting. And so, I like to think that I've looked at several different models, several different types of deals in my experience, and making sure that you're not banking on appreciation. I would say invest for cash flow, and do so in the right markets, with the right assets. Be cognizant of the risks associated with various debt structuring. And so that's how I like to think that we are preparing for, if anything were to happen with the market. We're investing for cash flow. We do value add deals. So, we have the concept of forced appreciation, and then natural appreciation, and we're getting the forced appreciation through the types of deals that we are focusing in on.
What's your best source for meeting new investors right now?
Okay, so one of my best sources for meeting new investors, and I would take it further to say creative ideas for new investors, is listening to podcasts. So as I mentioned to you prior to us starting the interview, I'm a religious listener. I think your show has so much value add content. And so one of my most creative ideas came from listening to one of your episodes and just thinking through the fact that my network is a lot of other CPAs. I know several different folks in this industry. And so working with your CPA to see if they're aware of anyone who would be interested in these types of investments. Obviously, they knew their clients that they're, issuing K-1s every year annually. So focus in on, your CPAs that you have a trusting relationship with. And one of the suggestions that I had heard from one of your episodes as well was, with the CPA firms that you have work to develop those relationships and then offer to pay for the postage on their K-1s. So that, you can provide some information on your company, and especially, as I mentioned, that the folks that they are dealing with are already invested in real estate and looking for good opportunities. So that's one of the most creative ways of finding new investors. And then another area I would say is meetups. So as soon as I went active, I started a meetup. We do both live and virtual events, and that's been a great way for me to meet new investors, meet other syndicators, other folks in the commercial real estate space. And I would say, don't be afraid to talk about yourself and your experiences at your meetup. Get the word out about your company and what you're doing. In one of my future meetups in the next few months, I'll be talking about my experience as a co-GP on this deal. So don't be afraid to put yourself out there and tell folks about your experiences, even if you're the one hosting the meetup.
I remember the episode where someone suggested paying for the postage. Do you remember who that was? I can't remember who it is, though. Do you?
Yeah,
remember?
What? I meant to look up the show number before joining, but it was great. There was that tip, and then there was a great tip about in doing my first deal. I think one of the most frustrating pieces of it was the time between you have the accepted LOI and then the time between when you actually have everything under contract and you have the investor presentation and the webinar and you're good to go. So, you're trying to get the word out that you have a great deal coming. So another great tip from that very same episode was to put together a great teaser for folks that tells them what you have going on and why it's a great deal, and invest, in putting together that great teaser, invest time, energy, focus in putting together that teaser, because that's going to help you accelerate, your capital commitments again. And that's like, the very frustrating time between when you actually have the deal under contract, but you've got an accepted LOI, and everybody in the industry is raising capital during that time, but you don't have a lot of information that you can actually share with your investors.
Yeah. Yeah, no, we'll try to look that show up and have it in the show notes. Because I agree. That was a very neat tip from your, we're about out of time, but I wanted to ask you as a CPA, how would you feel if somebody approached you about that, offering to pay for postage to get a little advertising or something?
So to be honest with you, I don't, my husband is a tax partner, and I approached him actually, but no, I was teasing him. I would say you have to just have the right level of trust. I would start the process by explaining who you are, what you do, how you prepare, as you asked, how you prepare for a downturn should anything happen in the market, and talk about your experience. Talk about the deals that you've done. with your CPA firm that you're pursuing, so that again you're being transparent and that you're going to take the time and develop that level of trust with them that would allow you to do so. And if that were the case, for me, I mean, I would move forward because I know a lot of folks know they should be investing in real estate and are looking for great deals. It's just a matter of, just like everything else, just a matter of time and finding the right information, the right deal, and finding the right people to invest with.
No, that's awesome. I appreciate you just speaking into that just from your background as well. What about the number one thing that's contributed to your success?
I would say the number one thing that's contributed to my success is my hustle. I think that once I get to the point where I say that I'm going to do something, there is literally nothing that can slow me down or stop me. And so I think that hustle comes from my discipline, and being able to be hyper-focused on things that I am incredibly passionate about. And real estate investing being obviously the number one area. So, yep, I would say my hustle.
And how do you like to give back?
So, with our real estate business, I've known for the last several years that I wanted to build a business around real estate, but I wanted to do so in a way that I could be incredibly proud of, supporting other organizations that I feel passionate about. And so we are working with a few organizations right now to donate a portion of our proceeds from our investments with these organizations, many of which are their mission is to raise funds and awareness for some very rare childhood diseases with unbelievably 0% survival rates, some childhood cancer organizations. And so I'm working with them right now by pledging financial commitments to them. And then ultimately, as my success continues in this industry, I'd like to be able to to volunteer more of my time with them. So, and help them raise awareness and raise funds. But until I get to that point, I'm using my business to help pledge my financial commitment to them until I have more time to be able to donate to volunteering.
Denise, it's been a pleasure to have you on the show and get to know you, and just the value you've provided to the listeners and myself. I'm very grateful. I mean, from selecting the right mentor, how you move fast from passive to active, and just raising money for the first deal, which can be so stressful, but how you approach that and just the communication through transparency with your investors, and then just some challenges as well from LP to GP. And just thank you again for your time, and tell the listeners how they can get in touch with you and reach out to you.
Sure. They can reach me. Our website is www.mlcapitaladvisors.com, or you can email me at any time and schedule time with me. My email address is dpiazza@mainlinecapadvisors.com. And hopefully you could put that in the show notes, Whitney, because I know that's certainly a mouthful. So thank you. And thank you again. Thank you so much for having me on the show. It's been a pleasure.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.